Hello and welcome to Gradient's weekly roundup of key business and financial developments in Sri Lanka for the week ending 4th March 2022. Here are the top stories for this week. Power and energy crisis persists as government assures supplies. Russia-Ukraine conflict to impact Sri Lanka on multiple fronts. Chemical fertilizer to be imported and distributed under subsidy. Tourist arrivals up, but Russia-Ukraine conflict threatens. We will also briefly look at other notable news that made it across to our news desk and wrap up with the capital markets update. In our main story this week, Sri Lanka's power and energy crisis persists as oil supplies continue to dwindle. However, by late Wednesday, the government assured that the power crisis would be resolved after the 5th of March. 7-hour power cuts were experienced across the country, with fuel stations running dry or extremely rationing their limited supplies. Although fuel had been purchased and shipped to the country, as Central Bank of Sri Lanka had issued dollars for the Ceylon Petroleum Corporation, Economy Next, citing authorities, mentioned that such supplies are not sufficient to run the country's thermal plants continuously. Udega Mampila, Minister of Energy, speaking to Derana TV, stated that only 20,000 metric tons of diesel stocks recovering for 4 days are available and that another ship is expected. The minister was also critical of the government's main decision-making arms. He stated that if the ministry is unable to obtain credit from banks, the government doesn't provide relief, and if the CPEC is not allowed to increase prices, he should be informed of avenues to find money to buy diesel. The Russia and Ukraine conflict continues to intensify, with Russian forces launching attacks on Ukraine on multiple fronts. The crisis will impact several industries in Sri Lanka, including tourism and tea. During the first 2 months of 2022, Russia was the largest source market for tourists with 28,392 arrivals, while Ukraine was the 4th largest with 13,039 arrivals. According to Forbes and Walker Tea Brokers, in 2021, Russia was the 3rd largest buyer of Sri Lankan tea, purchasing 27.4 million kilos, about 9.6% of Sri Lanka's total tea exports. Sanctions will affect such exports, and Russia being prohibited from using the SWIFT system will result in payment delays. Further, the ruble lost about a quarter in value since February 28th, thus impacting Russian customers' buying power. Additionally, wheat imports from the two countries to Sri Lanka amount to $240 million of Sri Lanka's $366 million wheat bill in 2020. Moreover, crude prices reached $107 a barrel, with industry experts estimating a rise to $115 a barrel. Supply chain disruptions in European markets is likely to result in further upward pressure on freight rates, affecting trading partners. Having rescinded the ban on the use of chemical fertilizer, the government announced that 38,500 metric tons of potassium chloride will be imported for the upcoming paddy cultivation season and will be distributed to farmers under a subsidy program. Previously, the government had stated that subsidies will be given only for organic fertilizer users and not those using chemical fertilizer. According to the SLTDA, 93,582 tourists arrived in the country between the 1st and the 27th of February, increasing the cumulative figure for 2022 to over 175,000. Russia continued to be the main source market, followed by India, UK, Ukraine and Germany. Tourists from Russia and Ukraine will decline in the next few months, as several airlines suspended services to Russia and prohibited Russian aircraft from flying over its territory. Ukraine also banned 18 to 60-year-old males from leaving the country. Inflation, as measured by the Colombo Consumer Price Index, rose to a 13-year high to 15.1% in February from 14.2% a month earlier. Year-on-year inflation of the food group increased to 25.7% from 25% in January, and prices of the non-food group grew to 10.1% from 9.2%. Continuing food inflation is due to supply constraints from the chemical fertilizer ban, now rescinded. higher global food prices, import restrictions, as well as the removal of maximum retail prices of many essential items. Workers' remittances in January fell to a 13-year low, declining to $259.2 million, down 61.6% year-on-year. Remittances have been falling since June 2021, when the central bank pegging the USD to LKR rate and offering 210 on the dollar for foreign worker remittances. As the informal Hawala system offered as high as 230 to 250 rupees a dollar in exchange, many migrant workers resorted to such channels. The latest move by the central bank to discourage this system's use is almost Orwellian. It asks the public to inform persons, institutions, or entities engaged in foreign exchange transactions outside of licensed banks and authorized money exchanges. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL20 Index at the Colombo Stock Exchange. Here's how the rupee performed against the dollar this week. In other market news, the state-owned national paper company is to be given to Korean Spa Packaging on a 30-year lease. The plant spans over 111 acres in Amilipitia and has been closed since 2012. Sri Lanka-based Korean Spa Packaging was established as a BOI entity in 1993 and is slated to offer corrugated and flexible packaging solutions. And that's a wrap for this week. Follow us on LinkedIn and YouTube for more updates on business and financial developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.